Welcome to The Explainer. Today we're going to tackle a topic that, let's be honest, can cause a lot of stress for business owners, the GSTR-9 annual return. We're going to break it all down for you nice and simple.
Yeah, that feeling. When you think about pulling together a whole year's worth of GST data, it can feel a bit overwhelming, right? Well, if that's you, don't worry. You are in exactly the right place.
So what is GSTR-9 really? The best way to think about it is like a final report card for your business's GST activity over the whole financial year. It's basically a grand summary of everything you've already told the government in your other returns.
Okay, so let's dive right in and unpack what this annual report card is all about. What information is it actually pulling together? You see, GSTR-9 is where everything comes together. It consolidates all the key figures for the year from your GSTR-1 and your GSTR-3B forms. Your sales, your purchases, your tax credits, the whole shebang, all in one place. Now, here's a really crucial point that catches a lot of people by surprise. GSTR-9 has to be filed separately for each GSTIN you have. So if you've got one PAN but you're registered in, say, both Rajasthan and Gujarat, that means two separate GSTR-9 filings, one for each. Okay, that brings us to the big question, probably the one on your mind right now. Do I have to file this thing? Let's figure that out. Well, for a lot of businesses, the answer is a clear yes. If you're a regular GST taxpayer, you're on the list. Same goes for SEZ units and developers. And get this, even if you canceled your registration halfway through the year, you still have to file for the period you were active. And hey, it is super important not to get GSTR-9 mixed up with its cousin, GSTR-9C. They sound similar, but they're totally different. GSTR-9 is the annual return that you self-certify. GSTR-9C is a separate reconciliation statement that's only for businesses with a higher turnover, and it needs a professional certification.
Yeah, it really all boils down to your annual turnover. So a smaller business might just file GSTR-9. But a larger one, say with a 6-core turnover, they're on the hook for filing both the GSTR-9 return and the GSTR-9C statement. All right, so now that you've got a good idea if you need to file, let's get practical. What's the game plan? What absolutely needs to be on your checklist to get this done right? Okay, first things first, the due date. This is the big one. Put it in your calendar, circle it in red. It's the 31st of December of the following financial year. Don't forget it.
And before you even think about starting your GSTR-9, there's a huge prerequisite. It's non-negotiable. You literally cannot file your annual return until every single monthly or quarterly GSTR-1 and GSTR-3B for that year is in. The system just won't let you proceed. Now, when you first open the form, I know, it can look a little daunting. So many tables. But don't worry, you really just need to focus on these key areas. Your sales, your input tax credit, the tax you've paid, and your HSN summary. Get those right, and you're most of the way there.
Okay, let's talk about some of the really critical rules and, the common traps that people fall into. Getting these right will save you a world of pain down the line.
So here's a question we get all the time. Can you use GSTR-9 to claim any input tax credit, or ITC, that you might have missed out on during the year? People hope it's a second chance.
And the answer to that is a big, clear no. You can't. GSTR-9 is purely for reporting and reconciling what has already happened. It's not a magic door for claiming new ITC. That ship has sailed with your monthly returns.
All right, next scenario. Picture this. You filed, you've breathed that sigh of relief, and then your stomach drops. You've spotted a mistake. So, can you revise GSTR-9?
And again, the answer is another hard no. Once that GSTR-9 is filed, it is locked in. It's set in stone. It cannot be revised. This is exactly why double-checking, maybe even triple-checking, every single figure before you hit submit is so important. But let's flip that around. What if, while you're preparing the return, you have that uh-oh moment and realize you actually underpaid your taxes during the year? Is there anything you can do? Actually, yes. The system provides a way to fix this. You can declare that extra tax liability right there in the GSTR-9 form, and then you just pay it off using a separate form, DRC-03. It's your last chance to come clean and square everything up for the year.
Okay, we are on the home stretch now. Let's quickly cover what happens if you're late and what the final steps are once you successfully cross that finish line.
So what about late fees? Yeah, they're no fun,
And here's the kicker. You can't even file the return until the late fee is paid in full. The GST portal will literally block you. There is no getting around it.
Wow. Okay, that was a whirlwind, I know. So if you just remember 4 things from today, let them be these. 1. GSTR-9 is your annual GST summary. 2. It's a recap of your monthly filings. 3. You can't use it to claim new credits. And 4. Once it is filed, it is final.
And that really brings us to the main takeaway, doesn't it? Preparing for GSTR-9 isn't just a December task. It's really the result of good, clean, accurate bookkeeping all year long. That final report card just reflects the hard work you've put in every single month.